to segment number 2 of the Cummins Real Estate Group show with Michele Cummins and myself, Curtis Pope. Now, Michele, I know you're probably a little disappointed today because normally it'd be the first show of the month we'd be doing stats, but they're not quite ready yet.
Not quite ready, no. So that will have to be next week. I know it's sad.
I know you sound quite down about it, like, oh, I don't have my stats.
You have to wait a week.
I know. I'm just like I had a feeling because sometimes when we line up this way, where it's like, yeah, she's gonna be a little down today. I'm gonna have to keep her spirits up because she doesn't have her stats.
They'll probably be out Wednesday or Thursday. I don't know, sometime. But I know. I'm so excited to see them. It's like my birthday every month.
I know. I get such a kick out of how much you love the stats. I love doing the stats show because it's just like you could just tell how fired up you are. It's great.
And you remember last year at Christmas time, I was like, why can't we have Christmas every month? How come we just can't, do this? And then I'm like, I'm going to start the 12 months of Christmas and do Christmas on the 25th of every month. Remember when I said that?
Yeah, and you were spoiling Richard Rotten.
Yeah, it's true. And I've kept up my word. I've done it every month.
Well, look at you. But you haven't got him a new guitar yet.
There won't be anything left for Christmas Day.
Yeah, you're like, I just got you a bunch of presents. You get nothing.
Right. Nothing like testing something out, though. It's been a lot of fun.
Yeah, it was one thing you didn't think that through. Hey, wait a minute. What am I going to do on Christmas Day?
I know. Shoot, what did I say I was going to do? Oh. Well, nobody said it couldn't be like a paper clip or something for my office.
That's true. You never said it had to be of a certain value or size or whatever else. I mean, yeah,
that's right.
You're covered.
A pine cone could be a gift.
Yeah, absolutely. You could paint a pine cone and go, there you go.
This segment, we are talking about variable rate mortgages, and we were talking on the break here a little bit about it, and you had an interesting story about somebody choosing the 1 year and coming back every year annually to renew.
Yeah, we were when we were getting our mortgage renewed years ago, the lady at the bank was telling us how this one couple kept coming in every year because at that time, doing a yearly mortgage was giving them a really good rate, like a good full point and a bit, probably lower than the current rate. So they were taking that risk that it wasn't going to jump up anytime soon and doing single year mortgages every year, going in and doing the paperwork.
You know how fast a year goes by too? You blink and it's gone. I can't believe it's already October. If I had to go in and renew my mortgage every year, that would I do live by my calendar, but that's a commitment.
Well, I guess it's a risk, just like anything else. It's like, like you were saying about variable mortgages. Like it's kind of like doing that in a way. You're not locking in for more than a year at the rate, and you do run that risk of it jumping up. But then again, if it goes down, stays the same, you're in a good spot.
Yeah, and most people go with the 5-year term. I mean, they do have the 1 year. They have the 2 year, the 3 year, 4 year, 5 year, I think 7 year, and then 10 year. And but most people don't. I don't know of one person actually that's ever gone even for the 1, 2, 3, or 4. It's either 5 year or variable, which is interesting. But at least there's the options. Okay, so the Financial Post did a recent article on this, and there's some other articles out there, but the trend is happening. It has been flipped upside down, and now more people are going for variable rate mortgages rather than the 5-year term, and it's booming, and you wonder, should we be worried? Well, for that first time in at least 5 years, variable rate is beating the fixed rate. It's amazing. So variable rate mortgages are surging all across Canada, and people are betting that the Bank of Canada interest rates aren't going to go up until 2023, as they said they're not going to move the base rate up until then. So that's what I'm banking on some of my mortgages, and what a lot of other people are doing as well. Now, it's really great because there's so much flexibility in a variable rate, which I've mentioned before, especially if you're an investor. But the National Bank's Darren King writes in a recent note that more than half of new mortgages made by banks, including renewals and refinancing, were variable rates in July, with the share of new variable rate mortgages at 51.3% and fixed rate at 48.7%. This is the first time in at least 5 years that the variable rate has taken the lead. Now, home buyers who go with variable over fixed increase their buying power by, catch this, Curtis, 9% for the same monthly payment. That's what he says. And that's a lot of savings. Like that makes you, especially in a seller's market where the rates are going up, any extra $100 a month you could put towards your mortgage, you try to. So it gives them a stronger buying power by 9%. But meanwhile, rates continue to fall. And somebody was just trying to call me there. Over the past week, 3 of Canada's big banks lowered their rates. And last week, the week before this article was written, TD Bank cut its insured 5-year fixed rate term as well, and its uninsured 5-year fixed rate as well. On the Tuesday before this article, CIBC even lowered its special offer insured 5-year rate. So what's interesting is the Bank of Canada's base rate doesn't change, but the banks can change their 5-year rate, right? And that's why variable's so attractive right now, is because we know where it's at, and they say it's not going to start going up till 2023. And when they do go up, they never go up fast. They never do that because it would just ruin the economy. People, when they renew their mortgages, won't be able to afford it because the rates go up so high, and then they go into foreclosure. So the Bank of Canada is very careful when it does start raising its rate. Usually it's a slow increment throughout the year or years that they're starting to raise it.
And we've seen examples of that in the past where that rate has gone nuts, like about 40 years ago in Canada here, and then even just a few years ago in the States when they had that housing crash, where houses that were worth $1 million, 2 years before, now were suddenly worth $200,000.
Exactly. Yeah. And I mean, there's the stress test that they, still have out there, which hopefully definitely helps those that need insured mortgages to protect them from the rate hikes. But it makes a difference in the pocketbook for sure, and in the debt of Canadians, which, they've piled on more debt during the pandemic, is what mortgage debt, I should say specifically, it's been driven historically by low interest rates and the desire for more space, of course, and that's why you've seen there's been a lot of buyers, a lot of buying, getting mortgages, and so that's the case of what's happening. But in the second quarter of this year, Canadians took out 410,000 mortgages, the biggest quarterly jump on record, and up 60% from the same time last year, according to data from Equifax. So the size of mortgages is also increasing, reports the Financial Post. The average new mortgage loan jumped 22.2% from last year. Wow. So Equifax's report also raises a red flag about home equity lines of credit known as HELOCs, which rose 56.7% from the year before, the highest in 10 years. So it's just crazy all that's happening. The mortgage surge has helped push overall consumer debt to a whopping $2.15 trillion across Canada, which is more than the value of Canada's whole economy. Wrap that around your head.
Wow.
Yeah. Moreover, almost 40% of variable rate mortgages in Canada have fixed payments. And that means when interest rates rise, you still make the same mortgage payment. A lot of people think, well, and it used to be variable mortgages, that means your payment every month is variable, it's different. And that's why so many people with salaries or on fixed income, they really love the 5-year term because they know exactly what their payment's going to be every month. There's no changing it. But now there's so many variable rate mortgages that have that fixed payment, which really helps in budgeting. So that's the news on variable rates.